Welcome back to my channel. My name is Lukman. Please, if you are coming across this video for the very first time, if you find a value in this video, please help me subscribe, like and comment, and share the video with your loved one. And please don't forget to click on the bell icon so that each time I drop a video like this, YouTube will notify you. Before I continue, I also need to tell you that all the information here is for educational purpose and is not a financial advice. Now, I haven't show us the indicator we'll be using for to spot the divergent trading opportunity. Then I've also gone ahead to also show us how to identify regular bullish and bearish divergence. Then the next step is to show you, having recognized all these divergence, how do you take the trade? How do you take the trade? Now you know the indicator we are using, you know how to spot the trading opportunity. Now, how do you once you have spotted the trading opportunity, how do you take the trade? How do you take the trade? For instance, let us use Great Britain pounds Australia as an example. Pounds Australia as an example. I'm using this pounds Australia as an example, and I've used the same pounds Australia in the previous video on how to spot divergence. So that's why I'm still using the same pair as an example. Now that the the price has making lower low, but what later is making higher low. If you are confused about how the price is making lower low and higher low, please go and watch my previous video on, I call the video how to spot divergence, how to identify divergence opportunity. Go and watch that video before you come back to this one, so that you get a better understanding of what I'm talking about here. So having spot the divergence, we are looking for, first what we need now is a bearish candle, a bullish candle, I mean, because this is bullish divergence. What we need is a bullish candle. Don't forget, you have spotted your divergence opportunity. The price is disagreeing with oscillator. It's telling you that this downtrend is coming to an end. Now that the downtrend is coming to an end and you have spotted your opportunity, how do you take the trade? How do you take the trade? How to take the trade is to look for a bullish candle close. What I mean by bullish, that is the green candle. A candle that closes as green is called a bullish candle close. Now this candle now serve as our confirmation signal. Look at it. This candle on the May 17 is our confirmation signal. So as the candle closed bullish, it closed as a buy candle. Look at what happened. What happened to it? You place your trade. And like I said, I do use SMA 20, simple moving average 20, as my take profit level. And my ID stop loss to be below, just few pips before the low of that candle, and I'll be taking profit here. So that is how to spot a bullish, how to take the trade. I haven't spot this divergence, how to take the trade. That is how to take the trade. This may sound confusing to you, may not, but let us look for another example. By the time we look up to 3 to 4 example or more than that, and I will also be sharing the. By the time you also see the way I take my trade in the weekly setup, you will be familiar with this series. Being the first time can somehow be confusing. Being the first time you are seeing this type of signal on how to take the trade, it can somehow sound confusing. But please don't be confused. So we have talked about pounds Australia. Let us look for more example. We use our pounds Australia before as a bullish divergent example. Now let us look for another example. Another example is Australia Canadian dollar weekly time frame. Remember, we are using a higher time frame from daily to weekly and to monthly because higher time frame give accurate analysis. Now we are looking at Australia Canadian dollar. And this dollar, the previous example, the first example I told you is a bullish example, bullish, regular bullish divergence example. Now I'm now showing you bearish regular divergence. Now we have spotted our bearish divergence here. How do we spot the divergence? This is how we spotted it. This is how we spotted our divergence here. You can see the price here. The price here is making. Look at the price here. The price make high here. You reach this level, it pull back and make another high. Are you seeing it now? But what happened? Look at our oscillator. This high here is equivalent to this high. Now, when the market now broke this level is 0.97559. We are expecting our oscillator to also break this 78.49 level so that it will be in line with what the price is saying. But instead, when the oscillator make new high, when the price make new high, the oscillator used to make new high. Instead, the oscillator started going down. So, and once the oscillator and the price, when there is a disagreement between two of them, that is what we call divergence. They are divergent from each other. They are disagreeing with each other. They did not align with each other. Once you spot this thing, it's telling you that there is a sell opportunity, and the sell opportunity is a pullback. It's a pullback, and so you can make more money because the signal is very accurate. I haven't spotted this signal. Don't forget, if you don't know how to spot this divergence, go and watch my previous video. The title is How to Identify Divergence Opportunity, so that you get a better understanding of what I'm saying. I haven't spotted this one. What we need a bearish confirmation, a bearish close as a confirmation for us to take our trade. And look at what happened here. This candle, which is May 10, 2026, it closed as a bearish candle on a weekly time frame. From there, having closed like this, we can now place a sell order. We can now place a sell order targeting our TP will be here. Take profit level will be this moving average, simple moving average 20. If you are confused on how we arrive at this moving average, go and check our previous video on the indicator to use. So we are using this level as take profit, and our idea stop loss can just be 5 to 10 pips above this high, above the side of this candle that first close bearish. And from there, you see what happened. The price pulled back a little bit, but it not hit our stop loss, and it now went down. You can see the price went down almost at our simple average. And if I were you, if I can get an entry along this side and the market has gone to this level, I will take my profit, because I'm not the one controlling the price. So the price has the divergence are giving you signal. So, and the market, as the price is approaching your moving average, you take your profit. That is how to use the divergence. It's as simple as ABC. It's not as difficult as we think. Like I said, I will be bringing more and more examples so that we will be familiar with all these things. So let us still look for more examples. Let us look for more example of bearish divergence. This is pounds. This is pounds JPY monthly time frame. Remember, we are using a higher time frame, and higher time frame give accurate analysis, accurate result. So this is monthly time frame. You can see what the pounds Japanese yen, what is doing here. Look at our resistance level 207.912. The market got to this level, it pulled back and start the uptrend and break this high. Are you getting it now? It break this high and went up. As it break this high, this resistance level 207.912. It broke the resistance and went up. Check our oscillator. This high is equivalent to this height here. Then this high is also equivalent to this one. But guess what happened? when the market break this resistance here and went up, the oscillator was also expected to move up. But instead, the oscillator did not move up. It started going down. It started going sideways. That's to tell you that the price is now diverging from the price is diverging from oscillator. And when you are seeing something like this, it's telling you that there is a sell opportunity. There's a sell opportunity here. So all what you need to do, like I said, if you see a sell signal, you wait for a bearish candle, a candle that close bearish on a monthly time frame first. When you see a candle that close bearish on a monthly time frame first, before you now place a sell. At this case now, the market closed and open at this level. You can place your sell here. The ideal stop loss should be above here, but in this case, the price just got to this high, which is the high of this red candle, and the sell is still in order because the oscillator has not break this high, which is 76.61. It has not break this high. So we are still expecting the price. To come down to this level. Remember, this is a monthly time frame. It will take months, in the next 2 months, in the next 3 months before the market gets here. But in as much as the divergence is telling you that this market is going down, the price will surely come down. It's a matter of time. That's why I said divergence will not give you much trade. It will only give you a very few setup, and it will only give you a profitable setup. So that's all about how to spot divergence. So later on, I will be sharing my weekly view here. So as I'm sharing the weekly view, any trade opportunity, I will highlight it to you people before the trend commence. It's not after the trend has gone far. I will now be sharing. No, I will show you the opportunity. I will highlight it using Divergence. I'm not using any trading system apart from this system. So I'll be sharing the opportunity before it started, and I will also be sharing take profit and the ID stop loss. I will also be sharing with you. So we have come to the end of example of bullish divergence and bearish divergence. And please, if you find this video, if you find it helpful, if you have not subscribed, please help me subscribe to this channel, like and comment and share it with your loved one. And please don't forget to click on the bell icon so that each time I uploaded a video like this, the YouTube will notify you. You will be the first to see the video. Thank you very much.